Welcome, everyone. My name is Vinodh Poyyapakkam. I'm the co-founder and CEO of Coris. At Coris, we are building the modern risk infrastructure for companies serving small businesses, such as MindBody. Coris is the first company that leverages AI to help companies automate SMB underwriting and manage risk seamlessly. Before founding Coris, I spent more than a decade managing small business risk at companies like PayPal, JP Morgan, and Google. So today's discussion is part of our ongoing webinar series on SMB risk best practices. These are monthly conversations where we invite leaders to discuss the hottest questions and trends facing our industry. There's been a lot of buzz about AI recently, as many of you know, and clearly we all know there can be some good applications for risk management. However, we haven't seen a lot of specific conversations happening about this. So we brought together experts and practitioners in the space to talk about it. Hopefully today's webinar should spark some meaningful conversations for you and you should walk away learning something tangible. We'll start off with a discussion with our two panelists today and save the last 10 to 15 minutes for Q&A. Please feel free to submit questions at any point of the webinar. You can find the Q&A section in the bottom panel of this webinar. And we also have a surprise poll towards the end of it. All right. Let's get started with some brief introductions. David Snitkof is a known industry leader in the lending space. He's currently the SVP of growth at Ocrolus and has founded companies like Orchard and has led data and analytics teams at Cabbage. Ryan Hildebrand is the EVP and Chief Innovation Officer at Bankwell. Has a ton of experience leading innovation at banks like Lincoln Savings Bank and other fintechs. David, Ryan, so excited to have you both in the panel today. I'd love to start with some quick intros for each of you. David, can you kick us off, please?
Yes, well, it's great to be here. Thank you for the brief intro. I'm David Snitkof. I lead the growth team at Ocrolus. And Ocrolus is an AI-driven document automation platform that powers a really large component of the digital lending ecosystem. We have over 500 clients in small business lending, mortgage lending, consumer lending, and a few other adjacent use cases. And we help financial services companies make high-quality decisions with trusted data and unparalleled efficiency. And we do this by automating document-centric workflows. There's about 1,400 different documents that we support. We do classification and extraction of the documents with near perfect accuracy. And we also do very deep fraud detection, cash flow analytics, and income analytics. And we're able to do that because we've built up the industry's largest data set of verified document data. So we've been applying AI in a very practical sense to real business problems for several years now, which is why this kind of discussion on AI's application in risk management is really, really interesting. So excited for a great time talking about these topics.
Amazing. Thank you, David. Ryan, can you please introduce yourself for our audience?
Yeah, absolutely. Ryan Hildebrand, Chief Innovation Officer at Bankwell Bank. Bankwell is based in Connecticut. It's been about a 20-year-old institution, really kind of a community bank. It's really transforming into more of a commercial bank and now transitioning more into a fintech bank. My background is one that has expanded banking, but also I've started really one of the first small business neobanks in the country. So I have a lot of experience at thinking about the small business space. At Bankwell, we're really focused on how do we tackle the small business, particularly on small business lending, SBA lending. We're also looking at how do we better serve the small business just in general. So we're really at the early stages of kind of the digital journey, digital transformation, and we've really launched full-fledged into AI. Thinking about how do we serve small businesses and using the use case of kind of lending as kind of that first thing to tackle.
Nice. Thank you, Ryan. Now let's dive into the topic for the day. First, let's set some context here. How can AI be used throughout the SMB customer relationship? There is a lot of SMB data out there, obviously much more than the traditional financial and trade line data from even a few years ago, right? But it's all usually unstructured and hard to consume in a programmatic way. I believe the AI progress in the last couple of years has made it really easy for us to aggregate disparate data on a business and extract insights from these data points to make them useful for risk management. I just want to show a quick slide in terms of how we think about it, in terms of the overall flow from SMB customer journey standpoint. So let me pull that up here. So I think the clearly in terms of the flow itself, right? There is like onboarding, underwriting, and ongoing customer management and everything, right? So if you think from an onboarding standpoint, right, like even before that, let's set some context here. We have to assume, obviously, whatever we see today will progress, basically like exponentially in the next couple of years. Almost like think of like 100x when you think about it in terms of the capabilities of AI. That's something we have to assume. And if you look at let's take onboarding, for example, how do we have more advanced doc verifications or pre-fill or autofill data as part of onboarding? For example, at Coris, we launched merchant real industry a year ago to automate industry classification using large language models. So we have a ton of enterprise customers using that to make merchant onboarding much more seamless. On the flip side, we all know fraud has gotten more worse with deep fakes and all of that. But AI is also used to fight that much more effectively now. So when you go into small business underwriting, being able to automate processing of incorporation docs, financials, merchant processing statements, and other docs has become much more common. And I'm sure David will have some things to say about that. At Coris, we were able to streamline adverse media screening on merchants and their beneficial owners with the use of large language models to summarize, categorize negative media on any of them, right? Then you have the opportunity to much better pattern match across the various data points coming from an application to known fraud vectors or even newer trends, right, that are still forming, instead of a risk analyst sifting through the various data points on a small business. And then last but not least, you have ongoing account management. This is often overlooked by folks, but there is a ton of opportunity to automate ongoing monitoring. You can do real always on monitoring without throwing people at it, right? So one of the issues in the SMB risk phase, I'm sure a lot of you are familiar with this, understanding when a business might be in trouble and knowing when a business files for bankruptcy. AI provides a much faster contextual understanding of businesses based on everything that's happening with them online or in other arenas. For example, traditional bankruptcy notifications have not been a very reliable alert management system due to the delays. But by the time you get those, it's usually too late to do anything, right? But with AI, there's a real opportunity to better understand when a business might be in trouble and act real quick without waiting for delayed bankruptcy alerts in a traditional way when it's just too late. Ryan, what are some of the things you've seen? I'd love to get your thoughts on it.
Yeah, I mean, I think again, we're super early in kind of where we're at. I think we've been really excited about the opportunities on the marketing front and kind of pre-qualification. So similar to onboarding, being able to kind of get through the noise. I think specifically around kind of our SBA business, I think there's a lot of work that we need to do to understand kind of what if a customer sits into our box. So the knowledge base use that we're using AI for, really thinking about the standard operating procedures of the SBA. So looking at those SOPs, being able to use AI to really be able to drill down to make sure that a customer is eligible or not is something we're excited about. I think compliance on the marketing front too, as we think about that, is something that we have to. I mean, obviously, being a bank, we're in the risk management business, so we need to make sure that both the customers are protected from a compliance standpoint, but also making sure that we don't run afoul from a regulatory standpoint. And the other thing that we really think about is kind of the opportunity on the cross-selling side. Thinking about not just loans, but other products that we may be able to offer and using AI to be able to match that to the customer. So just, thinking about across the customer base and using AI to be able to deliver that customer excellence is something we're excited about.
Nice. It's amazing. That's awesome. I think, David, we've seen that, like, what are, as we go deeper into this, right, what are some of the use cases you're seeing where Gen AI actually has an edge over traditional machine learning models or other forms of models?
Well, I think it's interesting and important for everyone to understand what are the differences between a deterministic system and a probabilistic system. And so for so many use cases in lending, you have to have a deterministic process. So if you're making an underwriting decision and you have to comply with fair lending and you have to issue an adverse action letter and something like this, you essentially need to have a deterministic workflow, which means that you can't use a generative model. which is a fundamentally probabilistic creature, to create that decision. However, there are many different things that you can do with generative systems to create data, to create structured data that goes into that process and to personalize the process for the customer. So one thing I often think about is merging together of various unstructured and differently structured data sets. And Vinodh, you brought up this idea of merchant industry categorization. That's a notoriously difficult problem because there's actually no perfect answer key. Categorization automatically implies a degree of judgment and prioritization. Do you consider something a coffee shop or a restaurant, or a coffee shop with a restaurant? And those are all different NAICS codes. And you can make these sorts of decisions through integrating many different data sets, all of which have different schema. And I think in, let's say, a previous version of the world, if you were a large bank, if you were any kind of financial institution that had data in many different places, both internally as well as from different providers, you had to do a very large data integration project where you had to say, okay, let me understand the schema of all of this. Let me clean all of the data, make everything merge together into a perfect record. And I think what you can sort of do with a generative algorithm is turn that from a total data engineering problem into a bit of a semantic search problem. I think that we're very early in the days of doing that in lending businesses, but there's a lot of potential there. I do think, traditional machine learning, of course, as we talked about, is still extremely useful. Deterministic machine learning, very good for credit decisions, for fraud detection, for pricing optimization. And when deterministic decision-making and interpretability is important, because often you want to have a decision that's interpretable. I think Gen AI does have the ability to take a lot of disparate and unstructured data sets and categorize them into structured variables that can be inputs into more deterministic ML. And I think that can end up being a very good combination.
No, that's actually a good point, David. Like the non-deterministic or the probabilistic nature of large language models generally goes well with the judgmental nature of some of the decision making you have to do. Obviously, ML models have their own place where you have deterministic nature of things, where there's not a lot of judgmental things happening. So they kind of coexist together. That's a great point to make, actually. Yeah. Ryan, let me ask you, this has been a debate a bit. When does it make sense for a fintech team to build a custom model in-house versus leveraging an existing model and then fine-tuning it, or even just wrapping around existing LLMs like GPT-4? What are your thoughts on it?
Yeah, it's an interesting question. I mean, I think from us as a bank, we're got 130 employees, 9 branches, 3 billion in assets. We don't have any engineers. So for us, it's thinking about, okay, what are we going to build first? How are we going to do it? Who we're going to partner with, and then at some point, do we build it in-house and bring on an engineering team? So for us, we started thinking the use case that we were running into was really this SBA product, which traditionally, it takes 90 to 120 days to close a loan. There's a lot of manual processes involved, at least from a traditional banking standpoint. And so for us, we thought, okay, let's look at a model. Let's see if we can work with the team or teams to build something that is really kind of off the shelf to start, to really understand, kind of have a use case kind of proved out. We felt like we had a really good use case to start with, and learned a few things going through this, but then realized that we needed to start to think about building something that was a little bit more bespoke. When it comes to banking, there's a lot of obviously risk management around third-party vendors. So we've got to understand the high-risk nature of that. So understanding kind of not only the partner we work with, but also thinking about the models itself. Banking is model risk management as well. So we really need to make sure that we understand that. We also need to think through things like policies and procedures, working with third parties. But at the end of the day, we wanted to get something quick and out the door and be able to pilot. And so that's something that we kind of really thought, let's get something out, let's learn, let's do something quick. Being able to have a human in the loop still is obviously important. So being able to make sure that the thought process of what the model puts together is going to be something that's important to kind of follow that train of thought. As we start to grow this business further out with AI, then obviously it starts to make more sense to really truly kind of own that model. Obviously, from an intellectual property standpoint, it's going to be important kind of differentiate ourselves in the market. Also, from just a risk standpoint, being able to understand what goes into that model, it less being more of a black box and more controlled by us, I think is going to be important. So it really just comes down to thinking about kind of that rent to kind of buy to build kind of opportunity of thinking through that kind of thought process.
Yeah,
Yeah, I think that. Go ahead, David.
The way that AI seems to be going almost turns traditional model risk management on its head. Previously, model risk management in most banks and as specified by the OCC and other regulators is about having really, really good lineage on your data. And all the data, you control it, what's going into the model, you can test, you can validate, you have control end to end. The paradigm of having a very, very large foundation model trained by a third party, even if it's open source, that you then fine tune or adjust into your own use case, it's a very, very different thing. And I think it's something that's going to take time for the industry and regulation to keep up with. I think a couple other things on this, with any technology, there's always trade-offs, and there's going to be a lot of trade-offs for this type of thing, whether you're talking about, cost, speed to market, security, risk, ease of use, explainability, all those different things. And you can only really solve those trade-offs by focusing on whatever outcome you're trying to achieve. The other thing that I've seen come up a lot is just the quality of a company's data. And so you can only start thinking about building these models in-house or fine-tuning them or serving them if you actually have a good data architecture and a good pipeline to begin with. The companies that have succeeded in doing this, and I think JP Morgan Chase is probably at the forefront, at least among megabanks, in doing this, is they've built a good data architecture over many, many years. It's really, really hard for an institution to start with AI now if their data architecture has been an afterthought beforehand. And I think you will see some sort of bifurcation in the market here. And hopefully there will be a bunch of good vendors that can step in and help people make the transition.
Yeah, I think that's a really good point. Like having a really good data architecture gives you the moat to go build something on top of it in a way more, confidently. Actually, that squarely fits into the model risk management and some of those things that regulators would expect you to do. Because the challenge you will see, I'm sure Ryan mentioned on this, using an LLM and all that, right? By its nature, right, they are non-deterministic. It's more of a black boxy. So you want to understand what goes in, what comes out, kind of thing. That's harder with that. But I think there are some use cases, to your point, Ryan, like especially with human in the loop, there are things you can quickly roll out and see how things are and all that, right? But again, it's a matter of what use case it is, how important it is, and the privacy and security implications and things like that comes into it. Other implications from a regulatory standpoint you want to consider. But it's a fascinating topic. I mean, I can't wait to see how this evolves for the next couple of years on this one. It's an arms race, really. Before you go forward, one quick plug. We have some questions trickling in. Feel free to submit your questions, and we'll have a few minutes to walk through Q&A at the end of the conversation today. So David, let me go into this one. All these advancements in AI, especially from fraud and risk, works both directions, right? Because fraudsters are always innovating on their own, definitely leveraging AI to develop more sophisticated attacks like fraud GPT. How do you think companies can stay one step ahead? What are your thoughts?
Yeah, fraud is just fascinating because it's always changing. We at Ocrolus, we focus on automating a document-driven process. And so as we started a few years ago doing really, really serious volume in document automation, all our clients asked us, hey, how do you even know the docs are legitimate? This is really important if we're handing this off to you. And we said, okay, that's a great question. And we started building these file tampering detection tools into our process, and we've become pretty good at it. And document fraud is really persistent in lending. It's probably a single-digit percentage of use cases, which they sound small, but if you've been in fraud risk, that's actually very large in terms of the financial risk and the operational complexity that it can introduce. There's also just many variations of this type of tampering. Sometimes someone will steal someone else's documents and pass them off as their own. They might take their own documents and change the numbers. You might buy a bunch of fake pay stubs on an illegitimate website, and then we have to track down the fingerprints of that document to know that it's legitimate or not. There's all kinds of stuff, and you are in a constant race with the fraudsters. And I think deepfakes are a great example, because you might have said even just a year or two ago, all right, the best thing we can do is get the person on the phone, and then we verify their identity, or we get them on video, even better, get a video of their identity. That, if it hasn't become obsolete already, it will. And that means that a lot of technologies and companies are going to be built solving that specific problem. I think, I mentioned before the ability to use generative AI solutions to find signals in vast, vast unstructured data and use them as an input into machine learning models that can be used in fraud detection. I actually think the opportunity in fraud is greater than it is in credit, because in the fraud world, lenders actually have more latitude to do creative statistical things to make fraud decisions than they have to do in credit, where you do have to kind of explain everything you do deterministically. So there's a lot of room for innovation in fraud. The other one maybe crazy idea that comes to mind is to have this notion of an AI red teamer. And I was thinking about this when I was watching the GPT-4o demos the other day that OpenAI released, and thinking about how much easier it's going to become to create agents, AI-enabled agents, and what kind of human tasks you would want them to augment or replace. And you imagine, let's say in your organization, if you had 1,000 fraud analysts, highly trained fraud analysts, what would you have them do? You might have them look at all kinds of cases. You might have them do a penetration test on your system. You might try all these things. Well, now you almost could build that with AI agents. So what if you had, red teamers, people who were trying to break down your defenses, who were trying to learn and adapt and forcing your system to adapt? If you could do that, you might actually be able to build a pretty robust system, generatively coming up with attack vectors that you might not have thought of beforehand.
I think that's actually an interesting idea. It's almost like an ongoing pen test from a fraud standpoint, because you have an agent that knows like what's coming in and then can adapt, because that's the adaptive nature of the agents can be really helpful here in this context. That's an interesting thought for sure. Ryan, what are you seeing? Any thoughts you have on this?
I mean, I'm my mind's blown constantly every day. What new applications are coming up? I think it's really, really up to us to decide how to best put things in play. And I think that's what I'm most excited about. I think there's just I'm just excited to keep learning and going forward, and kind of using the platform of a community bank to be able to test how these things might play out.
Yeah, one of the things we are seeing on the merchant side of things, especially on the payment processing side of things, when you see a merchant account application coming in, given the generative AI capabilities, right, people are easily able to spin up copycat websites. So let's say you have Callaway Golf, people can quickly spin up a Callaway Golf knockoff quickly as a website, and then they submit application as Callaway Golf. Now you have a real Callaway Golf website, almost looks like it. And then you need to figure out, is it a real one or is it a fake one a lot of times, right? That is something, and obviously a lot of other information floating online, like EIN and all of that. It's easy for people to come up with third-party impersonation, like think of like a business impersonation. So we are seeing a lot of it. That's one of the things we have factored in our models. Obviously, we use Gen AI as well to counter that on the other end, to say, is this a copycat website? Or are they using certain things that tells us it's potentially a copycat, right? So we're definitely seeing a lot of that from a fraud standpoint, and the merchant fraud. It's a cat and mouse game, as by each other. But again, like fraudsters are innovating as well. We have to innovate quite quickly as well. Definitely, it's going pretty rapidly for sure. You're seeing that. Awesome. So let's do a thought exercise. Ryan, maybe I'll start off with you. What is one piece of the existing risk management process that could be best served by an AI agent or automated? Do you have any examples you can walk us through?
Oh, that's a good one. I mean, I think, for us, I think the use case has been on that pre-qualification side. It's the number one time a small business applies for an account, for a loan, et cetera, is 10:30 at night on a Friday night, when we don't have humans, right? And so I think that's the biggest thing. Working with partners to be able to do that. Cascading.ai is one that we've been working with on that. I think having that agent that's live and ready to go, that understands the SBA SOP, able to answer questions quickly, in a way that is really customer oriented, has been a huge unlock for us. Thinking through, how do we get more deals into the pipeline and answered quickly. So that's been exciting, and being able to see the responses from the small business as well, where they're honestly treating Sarah, who's our AI agent, even though we actually say it's an AI agent, their response has been super honestly better than a real human in many cases. And I don't know if it's because they know it's AI, or maybe they don't know it's AI, or forgetting that. It's just unbelievable to see someone telling their life story of why they started their business, why they need the funding to be able to kind of grow things. It's really interesting. I think from a fraud standpoint, you can start to see, okay, is a fraudster really telling this deep of a story? Maybe they are using AI to write a story out. But at the same time, it feels so realistic, and in a way much better customer experience for that end potential borrower to be able to interact with someone again at a time that's most appropriate for them, which is again one off hours of a bank.
Yeah, not too far away before bots and bots are fighting off of each other, like fraud bot and anti-fraud bot.
I mean,
I imagine.
feels like it, right? Yeah.
They'll eventually develop their own language to communicate with each other more efficiently.
Exactly.
Okay.
They will know each other like the back of the hand. Oh, you must be a bad guy. They have their own signatures. That's amazing. I think, David, what do you think? Like, if you had to reinvent something, like going back, or even like think about like one of the existing process, well, what do you think is best served by an AI agent or some form of automation?
Yeah, so I mentioned before the idea of the integration of different data sets using a paradigm of search versus perfect, cogs fitting together integration. The other thing that comes to mind is just exception process handling. And, there's so many cases in financial services that have actually been in the happy path automated for a very long time. You apply for a consumer credit card, probably 90% of the time, you'll get auto decisioned with no human involvement, and that's fine. Where it really gets difficult, and where there's a lot of customer experience issues, as well as where organizations doing financial services spend a lot of their time and money and complexity, is handling exception processes, whether those are verification issues, fraud issues, whatever. And very often in these things, you have non-standard customer interaction. As Ryan said, it might happen at a really inconvenient time. And because it's an exception process, you're not just using the data that's part of the happy path. You're asking someone to upload new documents, to provide a photo, to go visit someplace in the real world, to provide proof of something, to write a letter, all these different things that might need to be brought into a decision. And, you could probably scale that if you had infinite humans and could pay infinite humans and get them not to need to sleep or be in every time zone around the world. But you could probably do that a lot more easily if you were to train AI agents to do these things appropriately. Now, look, no human borrower or customer of a business bank necessarily wants to interact with a robot out of hands. I would say no one likes a chatbot, a traditional chatbot. You would rather have a product that just worked and solved your problem so you didn't have to talk to a chatbot. But if you actually train an AI agent very well, I believe the best trained AI agents will probably outperform 95% of human exception handling agents in a banking workflow. And, you still probably have 5% of agents doing the most complex cases. But, and Ryan's example is great. The people love Sarah, even though you tell them she's an AI, maybe that makes them like her more.
Yeah, I do think how much of it is people want to talk to someone in flesh and blood versus like someone who can make judgmental decisioning, not just some automated thing going back and forth, repeating the same thing. I think it's just like people want to talk to someone or something, in my opinion, someone or something that can actually understand what they're saying and make judgmental decisioning. Definitely to your point, I don't think it'll get there 100% anytime soon, but it's 90 to 95% is very much there. Totally. I think that actually brings up one example on our end, thinking about exception processing. We think a lot about like how AI agents can potentially help or even reinvent some of the risk processes, the SMB space, especially in the payment side of things. Chargeback processing is something, everyone has to deal with. You cannot not do it. You have to deal with it to help your merchant customers. But it can be much more automated, for much better experience for merchants in general to be much more efficient. I think there's a huge opportunity there, the use of Gen AI, because it involves a lot of back and forth with the merchants, collecting documentation, quite a bit of judgmental decision making, and of course, you need to do right by the customer, right? So in general, this is something you have to do. You have to do it to make sure your merchants are happy. Obviously, card networks are happy, your payment processors are happy, and everyone, but not clearly a great revenue driver. So a lot of companies don't invest as much or don't want to invest as much. I mean, there's always a question, could AI help here, right? This is probably a classic recipe where AI could come in and help much better than just have humans go through it. Anyway, that's one example. We see quite a bit of it, things like that. Exception processing is something that's probably ripe for opportunities from AI standpoint. Awesome. I think we're going to do a poll of this question with the audience as well. So this is an interesting question. It's more of a thought-provoking, I think. I guess, will we see a search moment in the credit space, similar to what we are seeing in the broader tech space, right? So who could be the most qualified company to be the credit bureau of the future, especially for SMBs, right? So what we are seeing today is not just the AI of the future, right? Might be 50x even a year from now, right? So the context behind this question is you have companies like OpenAI or Perplexity coming up with a different search experience where they're providing an answer engine, right? Not just a list of 10 links to click through like as Google did. A couple of years ago, no one would have thought like someone would be seriously competing with Google on the search space. But companies like OpenAI and Perplexity were able to overcome a lot of it, even without the data. They don't have that, right? For the last 20 years of data that Google had, they were able to give some serious challenge to Google. So is there an analog in the credit space, SMB credit space, especially because there is no one single credit bureau for SMB credit, right? And my thought on this is like, I actually think what we are seeing today is not even the AI of the future. It might be 50x better even a year from now, right? If you go with that thought, unlike the consumer space, SMB data is very much fragmented and unstructured, not without, not much of reporting requirements and all that, right? As you know. So in short, there's no FICO-like score for SMB that's widely available. And then AI-driven normalization of the data and open banking changes that people are talking quite a bit about now might actually create an opportunity to leapfrog in the SMB credit space. There's even an opportunity to create this at a global level because unlike consumers, businesses are a lot more global or cross-border, right? So I think that's the way I think it's not dissimilar to how companies like OpenAI or Perplexity are trying to leapfrog Google when it comes to search. I mean, I just think that always blows my mind. Who would have thought a few years ago that Google's rich data from decades of search history won't help them build a quickly better next-gen answer engine? So I know I said a lot. This is something I think a lot about. David, what are your thoughts on this?
So, search is a really interesting analog to think about because even if you look at things like ChatGPT or Perplexity, they're not quite search. As you said, they're answer engines. Maybe they'll cite sources in the sense of Perplexity they do. In ChatGPT, it's actually starting to in some versions of it, but it's not quite the same thing as search. And so there's the technical ability to do this, and then there's also the user behavior of how do you treat the answers? I think there's something inherent in getting a set of 10 blue links from Google, which is Google just giving you these links. You have to click on them. You have to read them. You have to make your own judgment. I do think there's almost a risk or just people adapting to the technology where when an answer engine, a so-called answer engine gives them an answer, they might say, oh, this is the answer. Not, hey, this is, the highest probability result from putting together a giant matrix of things from all around the internet. So that's a bit of a user mindset that people need to get into. I think when it comes to something like credit, look, there's some chance that today's credit bureaus are actually the bureaus of the future. Having that truth file is very useful, particularly in consumer. But SMB is where there can be a whole lot more innovation. The data has always been fragmented. It's always been global, as you said. It's hard to get, it's hard to normalize. There's low hit rates. It's very sparse data among a lot of different sources. So I do think that, we've talked a couple times today about just the ability to semantically search really wide and disparate data sources. Fundamentally, credit bureaus have this paradigm of furnishment on one side and inquiry on the other. So financial institutions furnish data to the bureaus, and then they inquire about, consumer business performance when they want to issue credit. Maybe there's a new paradigm in an AI-centric data world where instead of having furnishment and inquiry, you have publishing and semantic search. And it's fuzzier, but with more iteration, with more scale, it could end up being pretty powerful. I think it probably requires different, some regulatory comfort, regulatory change, a lot of customer experience issues to think through. But I think we're not even in the first inning. We're in like V.1 of thinking about this stuff.
Totally. I think we are super early. I mean, there is also the looming regulatory potential thing, right? It could help or be a threat. Who knows, right? There's definitely that's going to be there as well. Ryan, what are your thoughts on it? I'm eager to hear from you.
I mean, I think we're as we're building out, really products that are focused on really small dollar, smaller balance loans to small businesses. I think we're really, really excited about the potential for AI. I think the thing that always gets, the credit team and everyone that's been in banking for, 20 plus years nervous is really kind of that black swan event that is completely, out of left field. I mean, I think, for the longest time, you could pretty much predict, how well, default rates would be for a small business. And then 08 happened, and the 11% or something like that, as far as defaults are concerned, just wiped out profits for the last 10 years of a lot of the largest banks in the world when it comes to small business lending. And so that's really the piece where I think it's really difficult. I mean, obviously the pandemic happened, and we lost a lot of businesses during that time, or potentially could have lost a lot more businesses without PPP. So I think for us, we're trying to figure out how do we score, how do we use scoring to be able to better serve small businesses and really think about how to use AI to pull it all together. But when it comes to the models, looking at SBA, last 30 years of data, you can look at that and say, okay, there's really a strong correlation to past performance. But then you start to think about, okay, what could happen next? What's happening and culture? What's happening elsewhere? I think the number one SBA performing loan is to breweries. In the next 10 years, are people drinking as much beer? Like, are we over, do we have too many breweries in the US? Is that really a good loan now than it was the last, call it 20 years? So things like that, you have to kind of think about, and it can't necessarily rely on models of the past, or something that we're thinking about.
I think that's actually an interesting point, Ryan. You mentioned like not just relying on the models of the past, right? Which is where Gen AI might help us uncover newer trends and how to think about, newer trends forming, right? That traditional data might not necessarily help. So there's also that opportunity potentially. Fascinating topic, actually. So would love to hear, I'm sure everyone has some opinion on this. Would love to hear more on this from everyone. Just launched a poll. If you have an opinion, we'd love to see what are your thoughts on it. Feel free to answer. And then, of course, feel free to submit any questions. We have questions trickling in, and would love to go through those Q&A as well. These are interesting topics. I'm sure everyone has variety of opinions on this. Would love to hear. And you can see the poll results as well as people are polling, right? As people are actually submitting the answers, you can see them coming up as well. Definitely a lot more people saying yes, although the sample size is super small yet. but I think definitely it's trending towards yes or no, and this is definitely interesting one. Um, yeah, I think I'm fascinated by this particular aspect of it specifically. Great. Let's look at some questions from the audience and then come back to the poll again and see where we land. So we have a couple of questions so far. One, I think maybe David, I'll start off with you. I guess as AI evolves, right? No one can predict, what's going to be a year from now. Is there going to be GPT-5? Is there going to be AGI and all of that? But who do you think might be the biggest winners in risk management as AI evolves? Not necessarily specific companies, but like, the types of risks people are going to fight or, manage. And then on the flip side, who should be most worried about, like in general, the type of companies, not specific companies?
So, I'm looking at Kevin's question, and it makes me think of a couple things. So number one, there's this intersection of needing to speak to a human and wanting to speak to a human, and they don't always co-vary perfectly. And I think there are some situations in the life cycle of someone's use of a financial product where they may need to speak to a human, but they really don't want to talk to a human. And these are cases like you're a small business owner, you've been trying your best, you're really stressed, but it is a bad market and everything's been going wrong, and you don't know if you're going to make payroll, you don't know if you're going to be able to make your loan payment this month. You know you should probably talk to your lender about this before you start getting collections calls, but you really don't feel like it. You feel sort of embarrassed. People may actually be much more comfortable in an AI-mediated agent interaction there than they would in talking to a human. I think there are other similar use cases across the customer lifecycle. I think in underwriting, this is true too, just applying for a loan. One of the things Ryan mentioned PPP before, back during the PPP, we had this incredibly large data set, both from the SBA as well as Ocrolus processed around 13 million documents as part of PPP. So maybe 2.5, 3 million of the loans to small businesses went through us, through our clients in one way or another, because there were a lot of documents involved. And we ended up co-authoring this study with a few professors on it, which was just published in the Journal of Finance. And what we were studying is, what was the rate of lending to Black-owned small businesses among different types of financial institutions. We noticed that the rate was so much higher for fintech companies than for banks. And we thought, why could this possibly be? To say discrimination would almost be a lazy answer. So we really dug into all the different details. And what we ended up finding was that the institutions that had a higher degree of automation also had a much higher diversity of the demographics of business owners that they ended up lending to. And I think part of that is due to, the borrowers themselves having a feeling of, do I feel like I can walk into a bank? Do I feel like I can talk to this agent? Do I feel like I'm going to be judged fairly? And people may actually feel that they're going to be judged more fairly by a computer who doesn't necessarily have human bias. And, the human mind is the ultimate black box. They may actually feel more comfortable interacting with AI-based financial services agents.
That's actually really interesting. I mean, obviously from a regulatory standpoint, there's always a lot of concerns on what does an automated system do? How does an automated system behave or react to certain things, right? Is it going to be biased towards certain segments versus others and all that? So, which is to your point, like, it's the other side of it, which is like a human might feel much more comfortable interacting with the machine, knowing how it's going to behave. It's more deterministic system versus human mind, which is being a black box. That's actually a really interesting perspective. Ryan, what are your thoughts on it?
Well, so I think it could be really, really beneficial. Thinking about how do we open it up and more democratize small business lending, et cetera. But also, I think there was apparently there was some studies recently at Stanford that said that ChatGPT's model responded differently to white sounding names versus black sounding names. And so we've got to, again, think about what are the underlying models. and make sure that there isn't bias and discrimination already in there. And so that's something, again, we're going to get called to the carpet on when it comes to model risk management is, are they truly models that work for the customer and that there isn't inherent biases there. So I think that's something that we're going to have to learn and think about policies around. Obviously, we haven't talked much about hallucinations here, but I think that's something that obviously is a huge concern from a risk management standpoint as we kind of move further into this space.
Yeah, that's a fascinating thing about a lot of these, right? There are clear dangers in terms of using some of these models as is, especially with the hallucination risk mentioned and how it's going to behave. It's hard to predict to some extent how it's going to behave in certain situations and all that. It really depends on what's the underlying training data and all that. On the other hand, we also see a lot of positive things that could come out of it. Like, how do you balance? How do you responsibly roll this out for broader positive things across the society? That's really the challenge, honestly, in front of a lot of us, if we have to summarize that, right? I think that's great. Thank you, Ryan. And then, so just going back to the poll, we had roughly 13 people answered, and overwhelming yes on almost from 77%, where they think there is probably going to be we will see a search moment in the credit space, SMB credit space, similar to what we are seeing in the broader tech space. I think, this is again, it's one of those things we'll need to watch out for how things are going to shape up, but it's interesting. Anyway, I think, I think you're good on the questions. I guess we close to the time for today's webinar anyway. We have roughly 10 minutes left. I just want to thank you both, David and Ryan, for joining us today and sharing your experiences and obviously interesting perspectives on this evolving thing called AI. I'm sure you both have a busy schedule, so really appreciate taking your time joining us here.